it was what I was hoping to see, which is that the more mature the network gets, the less volatile the price becomes. So I was expecting, and yet to be proven out, that each time we go through a bear market, that we see lower percentage falls. So Amazon is, I use this as my best example of network adoption models. It came out of, it went public, it fell 96% in 2001. It then rallied back, it fell 65%, then it fell like 45%, and then the sell-offs were 30%, and then was even less. So that's because the network gets more mature as more and more people join it, so it becomes less volatile. So that should be true of Bitcoin and should be true of Ethereum. And I think that's playing out. So what ordinarily would have been maybe at this point down 70% has now been in a sloppy down 50% sideways range. Okay, that's a whole new thing we haven't seen before. So it's interesting. Now, it's yet to be proven out. Who knows what plays out.
So Bitcoin, we're now at about 55% down from all-time high, from Bitcoin's all-time high. Ether, we're about 53% down from all-time high. Other assets, Solana, it's more in the alternative layer 1 space. It's 74% down from all-time high. Cardano, 80%. Terra is hanging out at 60% at this point in time. Dogecoin, 85%. Avalanche, 70%. Where do you think we end up with maybe, let's start with the Bitcoin and ETH. Do you think that's like 60, 70% down all-time high, or do you think we get even higher than that?
It depends what else happens. I mean, I look at the chart of Ethereum and I'm like, this could be a head and shoulders top, in which case we go significantly lower. We go back down to 1,500. Who knows? Or what's more likely is, I think, is we're forming another sort of wedge, and that therefore 2,000 is the low. I just, I don't know. These are volatile assets. But that the early adopted, so Solana should be what Ethereum was in the last cycle. How much was Ethereum down in the last cycle?
95%.
Well, it's going to be somewhere around that, right? And we've seen that play out, that kind of, Ethereum's been slightly different because it had so much adoption in this cycle. But generally speaking, they kind of look like each other at early stages, like the Amazon. So the early ones look like Amazon, and they become less like Amazon over, they become less volatile over time. So Bitcoin and ETH seem very similar these days in that kind of volatility structure. But, Solana, Terra, all of this needs to be proven out. Yeah, it feels structurally different. But, it's very difficult when markets like this, when everything looks absolutely terrible, it's very easy to extrapolate the worst. But generally speaking, it feels that it's going to be shallower and shorter, because I don't think it's driven by the halving cycle any longer. I think this is driven by the macro. This is a pure macro event. And I think as Ethereum has become a more dominant ecosystem over this cycle, its own kind of triple halving, or whatever you want to call the ETH2 merge, is going to be another factor within this market. So I think the structure of the markets changes, and that's just the network maturity that we talked about before. It's just how things evolve over time. So I think the structure has changed. I think it's going to be shorter because we think the macro cycle is shorter. I think we all kind of agree that feels like that's where we are. So it's short and brutal, but it's not been as brutal as the past ones, because the past ones were crushing bear markets. Don't forget, this time in 2018, we talked about 2018 a lot in this chat, is at that stage, 2018, we were down huge. I can't remember what we were down in Bitcoin by the 2018 Fed pivot, but that was the low.